We've got Stephanie Link, Chief Investment Strategist and Portfolio Manager at Hightower Investors, as well as a CNBC contributor. She is working. She is not a government worker, and she's got data, or at least some information to impart to us about how you're thinking about playing this market right now.
Yeah, I've got some data. The economy, Andrew, is running at 3.8% GDP. In the face of all these unknowns with regards to the government shutdown and tariffs, inflation, geopolitical issues, the Fed. So it's really remarkable how resilient the economy has been in the face of all of this. And a lot of that is driven by the consumer. I know we haven't gotten job numbers last week, the non-farm payrolls or initial claims, but the Chicago Fed tracker, they're tracking unemployment, and it looks like it's running at about 4.3%, and wages are running up 5%, spending is up 5%. The services, ISMs, are above 50 since 2023. So consumer is leading the charge here. And, of course, we do have the manufacturing renaissance that we've been talking about for over 3 years. Onshoring, reshoring, supply chains coming here, tariff incentives to do more business here. Durable goods ran up 5%. So I know not everything is perfect, but things are okay.
Well, if things are okay, what would you buy right now, and maybe what would you sell?
I buy housing. We haven't had a housing cycle. That's the other interesting thing, Andrew. We haven't had a housing cycle, and we're still growing 3.8%. Can you imagine when we do? Because housing, there's a multiplier effect. If you have a house, you have to furnish the house inside, outside. You have to have a car to get from outside to wherever you're going to go. So we're rooting for housing, and I think if interest rates continue to come down, I think you will get a housing cycle because we are short homes in this country. In terms of selling, I honestly, I'm doing more buying. I mean, over the last couple of weeks, I bought Active, I bought Coinbase, QXO, which is a housing play, Capital One. I think earnings are going to be really good. So maybe we have, I don't know, a little bit of volatility until the 14th, which is when the banks start to report earnings. And I think their earnings are going to be really good, double-digit earnings growth with mid-single-digit revenue growth. So
what's going to lead to that?
I don't have much cash right now.
What's going to lead to the housing boom that you're describing? Obviously, we were just discussing the president, trying to, for lack of a better word, jawbone some of the home builders to start building. I'm not sure I understand what that actually means in practice.
I don't think that they will. They would rather buy back their stock than build. And that's what's been happening for the last 15 years. We have underproduced. The home builders have underproduced for 15 consecutive years. I don't think anything's going to change. Now, what would get housing to do better? It's going to be all about interest rates. But I went back and looked at the 30-year fixed back in January 13th of this year. The 30-year fixed mortgage was 7.4%. Today, it's 6.4%. And we are starting to get little bits of signs of life in better than expected data. It's still not good by any means, but new home sales beat, pending home sales beat. So I think it's not going to take much. I think you probably have to get the 30-year fixed under 6 to really see more demand, but you're starting to see it. And that's really because we're short homes in this country, 3 to 5 million homes short.
You know, we basically talk about the AI boom just about every day, and the question is whether that is the thing that is levitating this market, or you think there's something else good happening underneath it?
Well, I think it's a combination. As I mentioned, I think the consumer is doing their part, and I think manufacturing. But
is the consumer doing their part, or is the consumer doing their part at the top end? I mean, we've had Robert Frank actually make this argument that it's really this talk about trickle down. It's really the top end consumer that's holding this thing together, and the question is whether that consumer is also an employee of some kind of business that is a beneficiary either of the stock market or of this AI boom itself.
I think it's home prices. I think it's the stock market. Absolutely. I think the consumer at the high end absolutely is doing fine. And they are the ones that are leading the consumers. It's always been the case, though. The high end always leads us, and even in the mid-tier, too. It's the low end that, unfortunately, always is suffering for one reason or the other. But the consumer at the high end is kind of chugging along. In terms of AI, I mean, it's for real. I know that the Mag 7 gets all the attention in terms of the CapEx, But if you look at other parts of the AI story, data center, grid, power, et cetera, the industrials are going to spend, the sector is going to spend $69 billion this year on AI, grid, data center, and the utilities are going to spend $188 billion fixing the grid. So it's a lot of different industries that are spending. And that's why I don't think necessarily you're seeing a bubble. I mean, I think that you're seeing so many industries that are impacted, and it is so powerful. So to me, I think it can continue to go. I think you absolutely want to have exposure. You had Tom Fanning on last week. He's the ex-CEO of Southern Company. I've not been telling everybody to go online and listen to that and watch that video because it was so informative in terms of what we need. He said that you need 24/7 capacity and energy, and we don't have it. And so this is going to last for a very long time, and a lot of different parts of the economy are impacted. So I think it's very bullish for the overall economy. I think that's part of the reason why we're seeing 3.8% growth.